Hey there, I'm Apple Crider with Investing Simple. In this video, we're taking an in-depth look at the question of, is M1 Finance safe and legit? Now, with the rise of all these new investing apps, many people are wondering how safe they actually are. You gotta remember, these things weren't around 5 to 10 years ago, and so this is still kind of uncharted territory in the grand scheme of things. Plus, we've seen lots of news stories come out about these apps potentially not being so safe and getting hacked from time to time. So that begs the question, is M1 Finance actually a safe place to invest your money? Well, M1 Finance is taking significant precautions in order to keep your money safe. However, this does not extend to your personal investment decisions. So when you invest in stocks or ETFs or whatever, there's always going to be a level of risk associated with that. You have to understand that as an investor, that risk is yours to take, and you have to match that risk with your risk tolerance that you are comfortable taking. Because if you make a bad investment, M1 Finance or any of these other apps out there are not going to be able to do anything for you. Nobody is, nor will any stockbroker out there, because when you make an investment, you are taking on that risk yourself. It is not the stockbroker's responsibility to make sure that you're not taking on more risk than you're comfortable with. However, with M1 Finance, there are some safety precautions in place to protect you, the investor, if something were to go south. The first of which is what's known as SIPC Insurance. And you've probably heard of FDIC Insurance before. This protects bank accounts, and SIPC Insurance is basically the investing account equivalent of FDIC Insurance. It's going to protect you from the risk of theft or loss of your security. So I like to think of this as kind of Bernie Madoff protection, where it's protecting you from a Ponzi scheme. Okay, if M1 Finance were to be running a Ponzi scheme, that's where SIPC Insurance steps in and says, hey, M1 Finance was committing fraud. You are going to be protected, and here is the money that you had invested with them. So they're protecting you up to $500,000 of securities, up to $250,000 of which can be cash. So if you've got less than that amount in your M1 Finance account, and it turns out that M1 Finance is just this complete scam that's fooled everyone, then you are going to be getting paid back all of that money, guaranteed by the SIPC. Now, if you're above this limit in your M1 Finance account, it might make sense to spread your assets across a couple different accounts, because the limit is per brokerage. So if you have $500,000 with M1 Finance, $500,000 with Fidelity, $500,000 with Vanguard, those are all going to be protected separately under different SIPC insurance policies. Now, on top of SIPC Insurance, M1 Finance's clearing firm, Apex Clearing, which is where your investments are actually held, they have another insurance policy that goes on top of that goes up to $150 million worth of security. So that's $37.5 million per person, up to $900,000 of cash per person. That is protected through this secondary policy. So if something happened higher up the food chain with M1 Finance's clearing firm, then you are going to be protected in that case as well with this additional insurance policy. So that's the SIPC, but there's also a couple bodies that regulate how M1 Finance actually operates. These are what's known as FINRA and the SEC, or Securities and Exchange Commission. These guys ensure that M1 is operating ethically and is properly registered to be doing business as a broker-dealer. They're making sure that they're complying with all of the rules and that they are having full transparency with their investors. So their job is to make sure that M1 Finance isn't doing stuff behind the scenes that their investors don't know about, because that would be fraud and that would not be allowed with the SEC. Now, I know I mentioned FDIC Insurance as well earlier, and some of your funds in M1 Finance may actually be protected by FDIC Insurance as well. So if you have an M1 spend account, this is basically their debit card and checking account, those funds can be covered by FDIC Insurance up to $250,000. So if you do decide to keep some cash in that spend account, that is going to be FDIC insured and fully protected. So the bottom line here is, if something does happen to M1 Finance, if it turns out that they are running this huge scheme that nobody knew about, you are likely not going to be financially impacted by that. This is because you still own your stocks, not the broker, not M1 Finance, and unless they are breaking the law, you're going to be receiving all of your stocks from them. Now, if they are in fact breaking the law, that's where SIPC Insurance steps in and pays you out up to $500,000, depending on the value of your M1 Finance account. So overall, the answer to, is M1 Finance safe and legit, is a pretty solid yes. They've got a lot of security measures in place to make sure they're not doing anything fraudulent that would put your funds at risk. Additionally, the SEC has some pretty strict regulations over M1 Finance and all of these other investing apps to make sure that they're doing things by the book and not defrauding any of their investors. Now, if you want to learn more about how M1 Finance actually works, we have a full comprehensive article on our website, investingsimple.com. The easiest way to find that is to head on over to Google, search for how does M1 Finance work, and then click on the link for Investing Simple. We'll see you over there.